Right. Good morning, everyone. Let's get started here. So last night's session, U.S. markets was obviously very, very strong. We literally closed on the highs and never really showed any sort of weakness whatsoever. There's it was a hell of a rally. Obviously, the follow-on in Asia was quite spectacular, and I'm not 100% sure to the for the reason of the extent of the rally, but it is what it is, and I think that it definitely felt like it's either caught the market a little bit short or caught the market quite significantly underweight. We did see another piece of M&A out yesterday with Media General coming out and buying Meredith Corp. There's actually been a lot of M&A going on in a market that's been shaky at best over the past, 3 weeks. So I think that's a very, very positive sign, all in all. There's, like you said yesterday, we saw a couple of material things that happened. I think kind of helped drive the market a little bit. One of them was a bit of recovery in the resource sector, and I think that was led maybe by a bit more confidence out of China. And so when you kind of combine all those factors, that obviously is one of the things that helped lead us higher into today's session. If you see Asia overnight, I mean, we're up 7.5% on the Nikkei. I can never actually remember seeing that. So like I said, I'm not 100% sure what the catalyst is. Obviously, the yen's had a big move and that sort of thing, but that's a massive move. Australia up 2%. Shanghai actually the laggard, the Hang Seng up 3.4%. So we're really just powering higher on all fronts this morning. Getting into earnings this morning, we had MMI out, headline earnings per share 234, expectations for 237. Revenue also a tiny miss, tiny miss. Then we've got Aspen out today, sometime during the middle of the day today. We're looking for guidance up about 14.5%. So just on headlines earnings per share. So just keep that in mind. That's going to be a big one to watch out for today. We did have some numbers yesterday, obviously lent some real action as well. In terms of market data, we had the Japanese M2 numbers slightly higher than expected. Machine tool orders a bit worse. We've got UK industrial production, manufacturing production, and then US mortgage apps later. So no real data to focus on today. I think we can a little bit more simply focus on just the market gapping around, making some exceptionally outsized moves in the market that we're seeing in the moment, and figure out exactly what we want to do with that for the time being. All right, let's get into some maps here. I'm actually going to show you some slightly different charts for a portion of it today. So the first thing that we're going to look at this morning is the German DAX. We're looking at that right there on a 30-minute chart, and you can see very clearly that we have broken out. Yesterday we failed nicely on this level yesterday. This is at about 10,365, somewhere in that region. We kissed it yesterday and then really just failed right off of it, nicely in line with the previous highs. You can see there, obviously, we're making a massive gap up this morning. As we speak, we're up 2.17% on the German DAX. That's an enormous move, and we obviously gonna have to take cognizance of that. Maybe we pull back and test the highs or test this breakout point. I don't know, but this is a big breakout. Lends us a target for about another 350, 400 points to the upside, which takes us all the way up to somewhere between 10,700 and 10,800. Another one that looks very similar is the FTSE. So you can see here the FTSE as well, making a nice breakout, gap up this morning, and this one is slightly different, less range bound and more of a narrowing wedge, but a beautiful pop out the top this morning. And these are classic setups. You want to be long in these things on pullbacks on these kind of setups normally, so just keep that in mind. Obviously all the markets really gapped this morning hard, and we'll just have to see if they have the same sort of follow through that we saw out of the Asia markets. The next one that we'll look at, we'll move back to the old charts, and we'll look here quickly at, I want to look at the U.S. bond market. So I've already got the chart up here. This is the U.S. 10-year, these are Treasury yields, okay? So you can see here we really kind of put in a ceiling around this level, around 220, 221 on yields. Starting to look a little bit like an inverse head and shoulder. I mean, this thing's just been ripping all over the show. It's been really hard to predict things off of this chart, simply because of the fact that the moves have been so drastic, and it's been very pillar to post. So if you see here, definitely looking like it's a little bit of a potential inverse head and shoulder, especially when we get above 221 on yields. And we've kind of consolidated above the 200-day again. So this is starting to look a little bit more bullish. Definitely looking like the possibility for rate hikes is starting to rise. So I think that's something to keep in mind. I don't necessarily think it's a negative thing if they do hike rates. Maybe it's a short-term negative, but I think it'll be a bit of a weight off the market's shoulders. Okay, it's finally out of the way. And we know that's probably, there probably aren't any really significant ones coming anytime soon. So that I think will give the market a little bit more clarity for the future. The markets like clarity; they don't like uncertainty. All right, next one we're going to look at is copper here in New York. So I actually really want to show you a 30-minute. Let me just show you on the charts again. Sorry about that. Okay, so let's go have a look at copper here. We're also going to look here on a 30-minute. Let's drag this back a little bit. So you can see here, I mean, this is by no means clear cut or well-defined here, but you can see that there's definitely some sort of level here at about 241 on copper, and to an extent there's a little bit of what I would say you could call a head and shoulder here, or the left shoulder over there, right shoulder here, and this is not clear cut, but it's there. I mean, it's very choppy, obviously, but the bottom line is that the waves, I think, are there, and that we're breaking out from this 241 level, and that really gives us a potential big, I say big number, quite a reasonable number to the upside, close to 260, and that changes the landscape a little bit for, I think, some of these miners, some of these stocks. It definitely changes the picture to an extent. So just keep that in mind. There could be a real move coming here, or a little bit more follow through even in copper over the next few sessions. All right, let's get back to the previous ones. Okay, I'm just going to finish up here with a couple of locals. So obviously the big one yesterday was Steinhoff. You see Steinhoff here. Let's back out. Steinhoff, nice breakout above the 80 Rand level. There's 80 on this chart. It's about right there, I think. We had gotten here before, right about where that high close is. So we got above 80 before, kind of intraday, and failed it, and then we never could really kind of make a close above 80. Yesterday, obviously on the back of earnings, really solid numbers. We saw a really nice push through on Steinhoff after the fact. One of the things that I think is key here as well, and someone made me aware of this late in after earnings to come out, but the earnings that they reported on the European side, they converted it to Rand at around 1370 on the Euro Rand exchange rate. We're sitting at 1513 at the moment. So we're talking about another 12% of upside potentially just on the movement in Rand if the Rand stays here. So really becoming one of the better Rand hedge stocks probably on the exchange. So worth keeping an eye on. And like I said, this is a beautiful little breakout here. The consolidation's happening from about 72 up to 80. I think it gives us a target to about 88. And we put in consolidation going all the way back to April, really. So I think this is enough. I know the stock's been one of the household favorites, but considering it's held on so well through this downturn, considering that it's put in such a long consolidation, I think this move can be for real. And then the last one I'll show, I'll just go back to AngloGold. I looked at it yesterday. we talked about this little narrowing wedge. Kind of looks like it's breaking out a little bit here, so I just wanted to bring it back to your attention, especially if you're drawing it from the closes, that we're breaking out the top here a little bit. I think if we get above, get to kind of close to 110 or above 110, then I think you can kind of lock this thing in as it's actually breaking out and probably go with it. That's it.